Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Monday, October 31st. Happy Halloween to all of those out there who celebrate. We are likely in motion for what could be a spooky week. We have some topsy-turvy sentiment. We've got, bearish Solana, bullish Ethereum, bullish Polkadot, bearish Tron. So we've definitely got a lot of things at odds after the big boost. So let's see what is coming up next. So the big news for this week is the FOMC meeting is Wednesday, November 2nd at 2 p.m. Eastern, which is just before the market close. And right now, based on the accuracy of the Wall Street Journal, Nick Tamiros to be exact, they were accurate for the past 3 rate hikes and now have signaled a 75-point basis hike for this meeting, which is lower than previous. And apparently the Fed is going to be debating the size of future hikes, which means 50 to 25-point basis hikes may be the next step. Now, BlackRock also reported that there should be quote unquote pivot language in this upcoming FOMC meeting, which would signal a pivot is obviously, the steepening of the federal funds rates as well as potentially quantitative easing. And that'll be what the market is looking for its signal for, creating a bottom. Now, that federal funds rate is related to the inflation rate, and the inflation rate right now seems to have topped at 9.1% and has seemed to come off. Of course, this could be a giant bull flag, but it does look like potential topping, as we can see currently. So the market is basically is starting to form the thesis that, hey, inflation has topped. The federal funds rate steepening cycle is behind us, and now we're going to be getting to kind of working towards just the very top of the curve. We're kind of, we're out of the truly bad stuff in relation to the federal, the rate hikes. And now we're moving into what should be the more, less extreme, more calm stage, which means that federal funds rate eventually is going to top and come off. Now, we don't know that for sure, but that's the general thesis if you're starting to think that we may be at a short-term bottom. Of course, with the rising of interest rates, that takes a long time to actually trickle into the economy. And of course, now we're above, I think 3%, for the federal funds rate, which means that we'll start to see the effects of that over the next 6 months, which is why we're probably seeing temporary relief now. We could definitely go higher. We'll discuss that shortly. The verdict is still out on whether or not we've formed a true market bottom. But the market is beginning to think in that direction due to inflation potentially topping and the steep rate hikes being potentially behind us after this meeting. So now that we've got that out of the way, here's when the FOMC meeting is. So 2 p.m. Eastern time, which is just a few hours before the end of the close of the market on Wednesday. And of course, this is where we're at currently for the federal funds rate. So we'll get up to about 3.75 to 4% after this hike, if the Wall Street Journal is correct. So looking at equities on the hourly chart here, we reached that, we nearly reached the 39.20 resistance last Friday. Of course, we got above 3,900 before the close. We've now come off that. We now bounced, around the highs that we met on Tuesday and Wednesday, and equities are trying to recover. So zooming out a little bit here, obviously 39.20 still, big level. If you can stay above, 38.50 and end up staying above, 38.80. And of course, 38.90 being that last little small resistance area. If you can get above 38.90, then you can start38 about moving again above 39.20 and then starting to move higher towards 4K. Now, if we can't get above 39, 38, or 39, or I'm sorry, If we can't get above 38.90 to attack 39.20, then you're probably slowly skidding back towards 38.50 and potentially 3800. So basically, this whole area is the range that we should be trading in until we break either lower, confirm break, or we break higher. Confirm break. So basically, you're either going to be stuck in this range until you can get above 39.20 or below 3800. And of course, the stepping stones that we want to get to 39.20 or 38.80. And then 38.90, just above 38.90 are the stepping stones we need to make to get to move higher. And of course, this is still likely going to be the weather vane for crypto. So if you're, your stuff definitely should still be watching equities for overall crypto movements. Of course, crypto is probably going to move in a bit more volatile fashion. So looking at Bitcoin, we obviously, we 20K was that big number. We bounced there, on Tuesday. We also bounced there on Thursday. And then, of course, 21K was, where our resistance, which we hit there on Wednesday. And we hit there on looking into very early morning Saturday, and of course, Saturday morning. So, basically, this is obviously the range, very similar to what we drew on equities. Below 20K, we need to confirm break below 20K to continue lower, and we need to confirm break above 21K to continue higher. If you can get above 21K, then of course 21.3 is the first target, with potentially 22 being the next. If you get below 20K, then you would expect 19.6 to probably act as resistance, as well as, of course, 19.1 where we traded previously. We are at the 200-day moving average on the hourly, which would be a ideal place to bounce. Ideally, in a perfect world, and I told the Trade the Chain community this, you flip 20.2. If you flip 20.2, then you can flip 20.5. If you flip 20.5, then you have a much better target towards 21. If you lose 20.2, then you're back at 20 and fighting to get above 20.2 again. Taking a quick peek at sentiment. Let's actually make sure that we did not. Definitely want those there. Taking a quick peek at sentiment, we can see that Bitcoin sentiment, rose back towards the neutral level. We definitely want to see that pick back up towards, above 50. It definitely could bounce here, but we're still in that bearish level. And then, of course, Ethereum looking a lot better than Bitcoin, more trading volume, more tweet volume. It moved back into bearish territory today, near where the current lows are. So, definitely looking a little bit better than Bitcoin. Bitcoin definitely going to try to recover towards 20.5. We'll see how it reacts at 20.5. Of course, if you are playing the range low, RSI more or less reset above the 20K level. Definitely a good sign to start the week. Looking at Ethereum, obviously, so here's the range high, 1660. The range low before it was broken this morning was 1580. This could end up just being deviation. So, we could end up just, if we can get it back above 30 or 1580, then that will just be deviation. And then we'd flip 1580 to support to try to continue higher back towards 1660. Of course, 1620 is going to act as resistance first. So if we deviate up and flip 1580, then you at 1580, then 1620, 1630 will probably be your resistance. Then if you can get above 1630, then you're at 1650 and potentially moving higher. If we fail at 1560, which is where we currently are, which is that current support that you can see right there with this POC. If we fail here, then we're probably headed back towards at 1510, which is also the 200-day moving average on the 1 hour chart, which would match us up a little bit more closer with Bitcoin. And then if we lose the 200-day moving average, then you have 1480, and then you have 1450 to act as supports. And if that's the case, if we end up moving all the way down here, then this whole thing is basically just range deviation. And then we're back to basically in a range within 1450 and 1580. So that's your outlook for Ethereum. Of course, equity is still likely going to dictate where everything's moved. So, really, this, of course, does look more bullish than not to me. But, of course, we have FOMC, Wednesday. So it's not extremely far out in the grand scheme of things. And so, maybe we end up doing something like this, before we end up consolidating back during FOMC, and then we either have a big spike up or a big spike down. But these are very tough weeks to start and make those bets. If you read the TTC newsletter, which is coming out later this afternoon, we actually mark out when each FOMC meeting was on the Bitcoin chart, so you can see where volatility was. Of course, if it's 75 basis points with dovish guidance, things will move higher. If it's 75 basis points without dovish guidance, I think things will be neutral. And of course, if it's above 75 basis points, things will end up moving bearish. So right now, equity, if a betting man and me saying equities are probably going to try and tackle the higher, the recent highs. If that's the case, then I would expect Bitcoin and Ethereum to do that as well. Of course, I could be wrong. I actually don't have any bets placed right now, to be completely candid with you. These things definitely do look a little bit more bullish from the current state of the chart. But, I'm probably not going to tackle anything until I see equities above 38.90 and until I see Bitcoin above 20.5. And until I see Ethereum above 1580, I think that's just the smarter and wiser move considering the volatility. You did not play all the volatility up. The common sense says you should probably be shorting, but common sense has been gone in this market for quite some time. So no moves made until we actually kind of test a few of the key levels that I have lined out. And then we will begin making moves. But of course, if you want to stay risk averse, better to wait for FOMC meeting to completely subside, and then you should place trades unless you're playing these small scalps. So good luck, happy trading. We'll of course update everybody tomorrow, and we'll of course have a daily crypto update before the FOMC meeting on Wednesday. So we'll have the full update for you based on everything playing out this week for FOMC and of course after. So good luck, happy trading. Speak to everybody tomorrow.